Welcome to Markets Now. I'm Michelle Rook with Naomi Bloom of Total Farm Marketing. We ended with mostly higher prices in grain and livestock futures trade today. And Naomi, corn and soybeans kind of retracing after the sell-off on Friday. Most of that was due to this Argentina weather forecast, but we couldn't get through resistance. And so what will it take?
Yeah, for prices to go any higher than where we are right now, it's going to take a legitimate forecast in Argentina of hot and dry to get the markets to be really excited to go much higher from here. Keep in mind the funds have become long in the corn market, and they're at a point where they need some legitimate news to take that market higher from here. So we saw Monday trade action as an inside trading day. Friday's bearish hook reversal still looming large on those contracts. Beans also with an inside trading day on Monday and easing off those highs from earlier in the session as the noonday forecast put in some better chances of rain for Argentina. So this week we're going to be keeping an eye on, of course, weather in South America, also watching export demand and seeing how the ethanol numbers are going to be on Wednesday. A lot of position squaring ahead of Friday's USDA report. That's the big one. The January report can bring a lot of volatility.
So let's talk about that January report just for the corn market first off, because 460, as we said, has been kind of capping the March contract. If you got ending stocks below the 1.7 we had last month, could you go over those levels, do you think?
Well, I think we're starting to price in a number closer to 1.7 already with this recent rally that we've had. So we'd have to come in more like a 1.65 in order to get that market to go resoundingly higher from here. We're heading into that report overbought. We are heading into the report assuming ending stocks are going to be lower. We're assuming that demand for ethanol and exports are going to be even a little stronger yet. Little uncertainty what yield might do. A lot of traders thinking it's going to come down. So we're expecting a friendly report. So now we're heading into Friday, and that report now has to be over the top bullish in order to the market to get that market to go through these resistance levels. So if we get a neutral report, we might see the corn market just start to edge a little bit lower. Now, I will say, if there's not any big dramatic change in that report, I don't think you're going to see corn go crashing lower to $4. We just go nestling back into the bottom of that trading range, maybe see the market go down to about 435. There's some very good support and value at those levels. And then as soon as the report is digested, remember, we're going to start then trading the new administration and all of the surprises and uncertainty that might be coming from that as well.
Let's talk about the new administration and the tariff talk on Monday that did actually influence the market, because it was a factor, wasn't it?
Well, yeah, absolutely. So if you remember back when President Trump was president before, anytime the guy would send a tweet out, the market would move. And it happened again today. And it was more in response to the Washington Post had a commentary thinking that maybe the tariffs and trades weren't going to be as big of an issue. And then President Trump came out and tweeted that the Washington Post story was wrong and it affected the value of the US dollar during the trading day. So now we're back to having to watch every single tweet that comes out from President Trump, as that might affect the market. A lot of geopolitical uncertainty also, the Prime Minister of Canada resigning. I just saw on the newswire that Indonesia is going to be now added into the BRICS, so that trading group with those countries. So there's a lot of positioning on the chessboard, so to speak, of geopolitics. So Friday's report, the first piece of the cornerstone for markets and prices for first quarter. But then after that, we're going to go right into watching geopolitics.
And as you said, tariffs, soybeans were at the tip of the spear last time in terms of the trade war with China. So we're going to be really sensitive in that vein. But let's go back to what you said about the funds being long corn. They're short in the soybeans. They're short in the meal. And so have they been covering shorts because of the Argentina concerns about weather, and do they cover many more, I guess?
Yeah, so they definitely, we saw them covering some shorts into end of year. I think it was a little bit more of end of year position squaring and that uncertainty of weather dynamics in Argentina. And again, the reason Argentina is important. So two things here. We know Brazil is going to be having a big crop. But the thing about Argentina is that they're the world's biggest exporter of soybean meal and soybean oil. So if they have any weather issues for productions of soybeans, then the thought pattern is that that's going to be less soybean meal, less soybean oil, ultimately to get exported to the world. So then cue the United States to be able to have soybean meal or soybean oil to export. And we saw India last week come in with the soybean oil purchase for exports from the United States. So that was really encouraging. So we want to definitely keep an eye on what is happening with Argentina. But then also there's the balance of global ending stocks for soybeans being record large. So we can absorb some potential production loss from Argentina because of this behemoth Brazilian crop that is out there. So it's a very delicate tightrope walk that we're going to be walking on this week. And then again, it all comes down to Friday's USDA report and weather forecast for South America.
Yeah, and in that Friday report, we are going to be focused more on South America or on U.S. ending stocks, do you think?
I think we're going to really be focused on U.S. ending stocks in terms of demand. That's first and foremost for the algorithms and the computers and the traders, because that sets up potentially our competition for acres for the spring in the United States. We're already expecting for the soybeans not too much of a dramatic shift for production numbers. And remember, last year, Brazil was starting to be on the drier side, and the USDA didn't acknowledge it for a couple of months. So I don't really expect the USDA to do any big tweaks on the global production side for soybeans from Brazil or Argentina. What we will want to watch on the global scene, though, is wheat. We want to see what the USDA does for global production numbers for wheat, for Russia, for Ukraine. Of course, for the United States, we'll have winter wheat seedings on this report because we're still dealing with global ending stocks for wheat trending lower and the lowest they've been in 9 years. And so the market just hasn't responded to it yet. So we're waiting to maybe get some fresh catalyst of news on the report that might get the wheat market a little bit excited. So that's something to keep an eye on because wheat is pretty cheap right now. There's also that thought that with wheat being as cheap as it is, it could then become a substitute for feed to help offset some shorter term higher value corn prices here. So that's something to be mindful of as well. So lots of pieces on the report Friday. And it's really tricky because there's so much data that comes across where, it takes us normal human eyes a good 10 minutes to look at it and go through it and really understand what's happening. But those computer algorithms will just jump on a few key factors. So you'll see an initial knee-jerk reaction one way or the other based on the computer algorithms. So you could see some quick price movement initially when the report comes out, but then 10 minutes later, when all of us have a time to really look at it and digest it, then you start to see the market potentially start to fluctuate a different direction. And how we close the day is the most important factor of all in terms of price.
Right. We always say that. It's more important how you close than how you open or how you trade during the session. You mentioned wheat being at pretty cheap levels, but the currency value continues to kind of work against us, not just in wheat, but in all of our grains, does it not?
Oh, that is such a big factor. Absolutely. So the US dollar continues higher, but when you look at global currencies, the Russian ruble, the Brazilian real, the Chinese currency, everybody is cheaper than us. And so that makes it tricky for our export markets. So not only are we heading into this new year with a new administration, but we're heading into the new year with potential tariffs. We're heading into the new year with a disadvantage in terms of US currency valuations compared to other currencies. So just remember, when our US dollar is lower, that makes it cheaper for other countries to import our products. So now that our US dollar is higher and all of these other global currencies are near record lows, it's a really distinct disadvantage for the American market.
No doubt. Cattle market, let's wrap up with that. New highs for the move in many contracts, even some contract highs and others on the heels of record cash. Does today's action negate some of what we saw in terms of technical damage that we did last Friday to the market? Do you think we still have upside?
Well, cattle market is one of those things to just take one day at a time and 1 week at a time. To your point, Friday's close, we saw that market with a big bearish hook reversal. So potentially a topping signal. But then we saw, higher cash values and we saw higher box beef values, and that continued into Monday's session with, again, continued higher box beef values. Thoughts that with the winter storm that's gone through, that might be challenging for livestock producers as well, might affect weight gain. So the markets today, Monday, were able to push a little higher and in some instances take out or really challenge the high price from Friday. So in some instances, that negates the negative technical action. So it's going to be, I think, just a daily battle in terms of watching cash markets, watching box beef values, and keeping an eye on domestic and also international demand. Market is also very well aware that at some point in January, it is thought that the border with Mexico is going to reopen. We don't have any dates on it, but the industry chatter is that it's going to be in January. So, it's a challenge for that market. I think from a fundamental standpoint, it's quite well supported where we are at this time. But as we've been saying for months, what's the consumer demand going to be like? Are consumers going to keep buying higher priced steak and higher priced beef, or are they going to offer cheaper proteins? And then also, just from the standpoint of the livestock producer end of it, things are getting expensive for them too. So again, touch and go, and every day will be a unique surprise, I think, for the livestock sector.
Absolutely. All right. Thanks so much, Naomi Bloom with Total Farm Marketing. And that is Markets Now.